Markets in the green, but marginally off highs at the start of trading week. Nifty up nearly 0.5%, led by healthcare, financial and metal stocks. IndusInd Bank top gainer after RBI assures depositors of the bank's financial health. Asian markets rise as China announces a plan to boost consumption and reports strong industrial production, retail sales and fixed asset investment data. US futures, however, trade lower after US Treasury Secretary Scott Bessent dismisses worries about the market fall, saying corrections are healthy.
SpiceJet shares have gained as promoter Ajay Singh converts warrants to equity shares, boosting his shareholding in the company from 29% to 33.5%. KEC International also gains on order wins. Ola Electric, though, is down over 6% after a vehicle registration agency has initiated insolvency proceedings against it on unpaid dues. End of 3 and 1 month share lock-in periods send stocks of Inventurist Knowledge Solutions, IKS as we know it, and MobiKwik and SBI Life down by almost 2 to 10%. International Gemological Institute falls as 3-month lock-in period for IPO investors is set to end tomorrow. And Maruti has announced a 4% price hike across models starting April, citing rising costs. This is the third instance of the company hiking prices this year, and it comes even as passenger vehicle registrations for the first 2 weeks of March are down by 22%. Good afternoon. You're watching us here on Halftime Report. We come to you live from the CNBC-TV18 Motilal Oswal studio. I'm Manglam Malu. With me, Hormas Fatakia. It's been a good start to this week. The Nifty holding around the 22,500 mark. We have seen some demand from lower levels, notwithstanding the supply from higher levels. We'll keep an eye out on that. The broader markets in the Nifty Bank doing a lot better. Look at the banking heavyweights right now. You have names like ICICI Bank, Axis Bank, HDFC Bank and Kotak Bank, all of them pulling in their weight on the frontline index. The macros of the country improving slightly, as we saw in the earlier last week, where we had better than expected growth coming in the form of IIP and lower than expected inflation that came in the form of the consumer prices index, the CPI as we know it. But as we speak about the macros of the country, at the bottom of your screen we have the data coming in for the month of Feb in terms of wholesale price as well. So the WPI number that has come in at around 2.3%, which is lower than what the street was anticipating, and indicates that there isn't much in terms of worry when it comes to inflation. What is the one that has contributed the most? The WPI food index is down 1.3% on the month. We have primary articles index, which is down 1.7% as well. And vegetable index, that's the one which is down 15.5% on the month. We have Lata with us joining in. Lata, inflation's cooling off, worries are abating?
Well, you may squabble a bit that the Bloomberg consensus was 2.29 and it has come in at 2.38. Also, the wholesale price index at a headline level is slightly higher than the January number. I think January number was 2.31. February is 2.38. But we are really squabbling about very minor elements. The big worry for the economy was food prices, and that has fallen by a good 200 basis points. Not surprising, we saw a similar trend come in even in the consumer price index, and the wholesale price index is actually just reflecting that fairly sharp fall that we saw in consumer price index as well, especially food prices. Cereals, as you can see, that is the big element in the food basket. That's fallen. The only couple of items that are not falling are edible oils and a little bit of cereals as well. Cereals could fall a little sharply considering that the Kharif harvest is entirely in the market. So you could grumble a bit. As well, fruit was something which was resisting. But otherwise, we have seen, all articles falling rather sharply, and therefore little to complain about in terms of inflation. I think we have a guest with us. Aditi Nair is with us. Aditi Nair, the chief economist at ICRA, is with us. Aditi, 2.38, are we just getting more and more confident that wholesale index is not a problem anyways?
Thanks, Lata. So as you said, our forecast was also 2.3%. So this is just marginally higher than what we were expecting. I would say that overall, there are some points of concern when we look at the trajectory for the WPI inflation. But overall, it's only expected to inch up in our baseline. The points of concern, of course, are the fact that the rupee has depreciated. The Bloomberg Commodities Index, for instance, was up last month. But of course, crude oil prices have eased off quite a lot. So a lot of these factors, as of now, are counterbalancing each other. Going ahead, what happens with trade and tariff policies, especially coming out of the US, will certainly have an impact on these key matrices, especially the rupee as well as commodity prices. And that will
No, but
have bearing on how the WPI
Aditi, we already saw a fairly decent rupee depreciation from October, November to today, or for that matter, all of February. At February, the average was almost 87. But we are not noticing any deterioration or any increase in manufactured products index, are we?
Sure, Lata. See, at a headline level, this month particularly, it is the food prices which have helped to keep the headline fairly stable. Fuel and light, I believe, is one area where we have seen the inflation rate coming in a little bit higher than what we had penciled in. And that's offset the fact that the food side has come in lower than what we expected. Overall, we're expecting only a marginal uptick going ahead in the WPI inflation. For instance, our full year averages are 2.7% for FY26 and 2.3% for FY25. But I'm just saying that these are the risk factors that we need to keep in mind.
Okay. Yeah, actually, there is a slight increase in manufactured inflation. Very, very slight, as you can see, by a few basis points. I think its manufactured has gone up from 2.5 to 2.86. And that may perhaps be explained by a little bit of rupee inflation. You were saying something?
Yeah, I just had a curious question. We had the CPI data that came by last week, and now we have the WPI data. How much of there is an overlap between the two when it comes to the nature of the goods that are there?
Well, the wholesale index is not as food dependent as the consumer index. Consumer index is 45-46% food dependent. The wholesale index is, I think, only 25% food dependent. We have much more on fuel price as well as manufactured products. They have a higher weightage. And that's why the manufactured product index has slightly gone up from 2.51% inflation to 2.86, which explains the headline inflation going up from 2.31 to 2.38. But there was a Reserve Bank overall modeling as well that I think some 10% rupee depreciation leads to a 35 basis point rise in inflation. We are nowhere near that level of inflation. Am I right, Aditi? We don't have to worry about rupee inflation or rupee depreciation and its impact just yet, correct?
Yeah, that's quite right, Lata. Not just yet. And the other major difference between the two indices is that the CPI is about a quarter services, and there are no services in the WPI. WPI is heavily manufactured products.
Got that. So be that as it may, with the CPI, the WPI, we have the IIP and all that's taking place in the world where there is so much uncertainty around Trump-related tariffs. But at the same time, we've seen a decline in the dollar index as well. All things pulling in multiple directions. Where do you see the RBI, or what do you see as the RBI's next move?
So I certainly expect a rate cut in April. I think that's absolutely on the cards. I'm not convinced that we will necessarily get a stance change in April. I think we may get another rate cut without a stance change. Thereafter, the May GDP data, which will be the Q4 data and the full year growth number, that will be quite important to gauge whether we have a third back-to-back rate cut in the June policy, or does that end up getting pushed forward to the August policy?
Okay, so two rate cuts. The third rate cut, whether it's June or August, is what you're wondering. Just to add to the details of what we have got from the WPI now, as expected, it is vegetable oils that are higher. The year-on-year rise in vegetable oils wholesale price level is 33.5%. That's clearly because import duties were raised. The idea is that domestic manufacturing should be, or domestic production of edible oils should be encouraged. So that is clearly showing even month on month, the wholesale price index for vegetable oils is up by 1%. The other element which has gone up is tobacco products. That's gone up by 1.5% month on month. And otherwise, textiles 0.07 month on month, leather products, wood, all of them are negligible. The only things that have shown a little bit of increase are chemicals, but these are really, we are splitting hairs over here. Non-metallic metal products up by 0.6. Cement is up 0.9 month on month, but year on year it is minus 3.6. So really on manufactured products, there is nothing to sound alarm at this point in time. The only product is edible oils, and that is by design with the government raising edible oil product tariffs. Aditya Nair, thank you very much for joining me. The consensus has clearly moved to 3 rate cuts, but that was done already when the consumer price inflation came. I don't think WPI is adding or detracting from it. It is only reinforcing our view that inflation seems well under control.
It does seem well under control by the numbers. Lata, thanks a lot for joining in. The WPI numbers on your screen, 2.38%. Absolutely no cause for concern unless you get down to extreme specifics. But for now, there is no reason to worry. We take a short break, get you more on the markets and specific stocks on the other side. Stay tuned.
Welcome back. The market's doing well right now, specifically the Nifty Bank. Axis Bank has moved to the high point of trade, as has ICICI Bank. But what's also supporting the cause of the frontline index is Infosys. Infosys has moved to the high point of trade, so just keep an eye out on that. IT was a bit of a drag. Infosys has a higher weight out there, and that stock not falling. In fact, moving to the higher end of today's trading range has kept the IT index afloat as well, and that explains the up move that we're seeing on the Nifty. However, one stock which really stands out is Trent, which is up around 3%. It's been a very volatile stock lately after a near 40% decline, but today's up move is also coinciding with a notification that the company gave to the exchanges that over the next few days they will be meeting a bunch of analysts. So yes, last 3 months down 26%, from its high it's down 40%. On March 20th, they will be meeting analysts / investors from the likes of Jefferies, and then you'll have some others as well. JP Morgan and Jefferies, the meeting was on March 20th. Thereafter, the next day, March 21st, you have Tata AIG, you have Franklin Templeton, you have Federated Hermes, all of them meeting the company as well. So maybe some sort of guidance, some sort of growth prospects, some more detail on the way business is growing is something we'll get out of those meetings, and these analysts may perhaps put pen to paper as well. So we'll keep an eye out on that. Stock, remember, like I said, down 38% from its highs. But another stock which is down fairly from its highs is BSE, and today there's a UBS note, Hormas.
Indeed, and the stock is almost halved from its peak, right? 6100 was the peak, 6133 to be more precise. So almost down 50% from those levels. And after this fall, BSE has gone ahead and initiated coverage on the stock with a buy recommendation, a price target of 53.50, and that is implying a potential upside of around 37%. Now, what UBS is saying is that scaling up of the options turnover is going to be the key driver for BSE going forward, and the fact that it has diverse revenue streams, it is expecting operating margins to improve. So positive factors bode well for BSE going forward. And it also says that this current valuation that BSE is trading at, which is around 33 times FY 1 year forward PE, which is around 11% premium to its historical average, that is of less relevance now, considering the fact that BSE has revamped its business model. So after this historical premium to its historical valuation does not have much relevance, and as a result of which it has gone ahead and given this buy recommendation, 53.50 target, almost a 40% upside, but that also comes after the stock has almost halved from the top.
Take that point entirely. That's BSE for you, and there's a note that has come in. The other one that I'm looking at is Patanjali Foods. It's marginally in the green today. This is the Insight Edge segment this morning. There's a note that came in from Jefferies where they've initiated coverage on the stock. They have a target price of 2,050 rupees. The reason why they like is because the company has diversified away from its commoditized oil business itself, and this diversified consumer franchise is something that as per Jefferies can deliver double-digit revenue growth and margin expansion going forward as well. Remember, ever since Patanjali Foods, Patanjali acquired Ruchi Soya and is now moving into margin accretive portfolios, nearly 70% of the company's valuation is now derived by its newer diversifications. So those are things we'll keep an eye out on. They first bought the foods business of Patanjali Ayurved and the biscuits, etc. And now they recently bought the home care and personal care business as well. So all these factors working in favor of the company. What's not is the volatility that we're seeing in edible oil prices itself. Moments ago, we had Lata come and talk about that as well. So earlier today, we spoke with Sanjeev Asthana, who's the CEO at Patanjali Foods, who expects margin expansion to continue for their palm oil plantation business and 8 to 10% margin for their foods and FMCG business, along with 4% EBIT margins for their edible oil business as well. And for all those who are wondering over the weekend, is Patanjali getting into insurance? Yes, it is, but not Patanjali Foods. It is Patanjali Ayurved, which has no financial bearing with Patanjali Foods itself, and that's something that the management clarified as well. So let's hear out what they had to say in our special Insight Edge segment.
We are clearly witnessing some bit of slowdown in the imports in terms of volume terms. That is more than made up by the oil inflation that we witnessed. But broadly, for the year, we are pretty confident of still meeting between 2 and 4% of growth target on the edible oil volume. Pretty confident about exceeding 4% plus of EBITDA margin on the edible oil side. On the FMCG regular businesses of foods and non-food, there is some slowdown we see in the urban area, so that continues. But broadly, we are pretty much within the ballpark range of 8 to 10% target that we are on the food side. The HPC business is still integrating. The first full quarter we'll see in this last fourth quarter now. And pretty much we are on course to achieve 15% growth on the HPC side next year. Every year, our EBITDA run rate, what used to be about 160, 170 crores, we are upwards of, somewhere around 220 crores odd we make as an EBITDA. So every year that is spiking up. But the big growth in the EBITDA and the contribution to the revenue shall happen maybe in 3 years' time, when all the plantation that momentum that we have of last 2 years, I think will start to fruit. So pretty much from 28, 29 onwards, you will see a big expansion. And that the estimation is broadly that, if the run rate of our targeted sort of plantation size, the margin expansion that we expect to happen. So we should pretty much be nearly 3 times of where we are today in 4 years' time.
That was Patanjali Foods in our Insight Edge segment. The Nifty has now slightly slipped below that mark of 22,500. Still holding on to gains of around about 100 points, but still off the highs of the sessions, 0.5% higher now on the index. 22,490 is where we stand. Take a short break. Saumil Mehta of Mirae Asset Sher Khan joins in on the other side to give you a quick chart check as well as some trading strategies. Stay tuned.
Welcome back. Just keep an eye on 2 things in the market right now. We are seeing, one, the Nifty below that 22,500 mark, and secondly, the advanced decline lines. They should come up for you. They've crisscrossed, and now we have more stocks which are declining versus the number of stocks which are advancing. So we'll keep an eye out on this trend, because just as we speak, for most part of today's trading session, the green line was above the red line, and now they've just intersected, and we have 1,400 stocks declining for 1,200 stocks which are advancing. So we'll keep an eye out on this trend in the second half of this trade. But perfect to look at the way the market's set up from an FNO perspective. What we've seen is that the Nifty has been facing resistance upwards of 22,500, at least on the last 4 occasions. If you look at March 11th, March 12th, March 13th, 14th was a holiday, March 17th, that's today, the high has been 22,577. In fact, March 12th high and March 17th high have both been the same. And what today's high also tells you is the inability for the market to cross that 20-day moving average. The Nifty itself, 22,587 is the 20-day moving average. Nifty earlier as well was trying to make an excursion towards that when the moving average was a lot higher, faced some supply, and today went within 10 points of the 20-day moving average and saw some supply come in. What happens is, next is what happens to Nifty Bank. That's how we'll look at the frontline index, because the Nifty Bank is doing well. It's led higher by HDFC Bank, by ICICI Bank, by Axis, and also by Kotak Mahindra Bank. So all these big weights are powering the Nifty Bank ahead. The Nifty Bank is about 300 points away from the 20-day moving average on that one as well. So even the Nifty Bank is struggling to get past the 20-day moving average. So those are a couple of levels that we'll most definitely keep an eye out on. On the Nifty itself, it's the 22,500 mark which has seen the most amount of action. 22,500 put has a premium of 100 rupees, telling you 22,400 is an important support. 22,500 call as well comes up for you. That has a premium of 124 rupees, telling you 22,600 is an important resistance. So narrow range that you're looking at, 22,400 at the lower level, 22,600 at the higher level. A lot of short positions being added on LTI, Mindtree, but a couple of long positions being added in the markets as well right now. The broader markets, you do have some, pharma names, Muthoot Finance, all of them seeing long positions being added in the F&O space.
Continuing to come off the highs now is the Nifty 22,450 is where we stand, almost a 40-point downtake in just a few minutes. Just before we go to Saumil Mehta, just highlighting a couple of mid-cap IT names that are getting absolutely hammered in today's session. First Source is one of them. Is down 8% now, is the top loser on the Nifty 500 index, and almost every stock on the mid-cap IT segment is facing some bit of selling pressure today. Happiest Minds is one of them, that's down 4%. Sonata Software is down 3.5%. LTI Mindtree is down 3.5%. As is Zensar. So mid-cap IT not having a very good day at the office in today's trading session. Most of them too at the lowest point of the day. But Saumil Mehta of Mirae Asset Sharekhan is joining us now on the show. Saumil, good afternoon. Thank you for joining in. Yet again, a familiar resistance at 22,600 for the index. What are the charts indicating here? And do we see a prolonged consolidation phase? And couple that up with your stock-specific recommendations as well for the afternoon.
Good afternoon. The bias remains positive. However, it's been consolidating. Nifty has been consolidating in a range. The lower end is 22,300. The upper end is 22,600. Any close about 22,600, I think the uptrend confirmation comes in, and the next target would be 22,900, which is very close to 40 daily exponential moving average, which is my target as well. However, the stocks are looking very good. Bank Nifty is looking good. Reliance is looking good. Heavyweights are looking good. So bias remains positive overall for a target of 22,900. My stocks would be, the first one would be Hoodco. Buy on the, it's making an inverted head and shoulder pattern. Stop loss would be 180. Target would be 200. Trent, it has made a small ending diagonal pattern on the hourly charts, and it's breaking on the upside. So the target should be 5350, and the stop loss would be 5,000.
All right. And individual stocks, so what do you have on your list apart from Trent?
Trent, one more stock I would give would be VBL. The stop loss would be 485, and the target would be 540.
Yeah, Varun Beverages is also another one that is picking pace. Typically, it's this time, post-winter, as we move towards summer, that some of these beverage makers do well. And Varun Beverages, entering into season, is moved higher, up around 3%. But good time to step into a short break. And as we do that, let's get you some good news. All you viewers, you have the India Business News Leader, which is now just a click away. That's CNBC-TV18's all-new app, for which you get instant access to breaking news, in-depth articles, and all the financial world updates, all of them at your fingertips itself. You can download the CNBC-TV18 app now from either the Apple Store or the Google Play Store, or you can just scan this QR code on your screen.
Welcome back, and we're shifting focus to the auto space now. Two contrasting fortunes now. Maruti is one of them, and that is doing well for itself. It's slightly off the highs of the day though, and that is after the company announced a price hike. In fact, it has now slipped into the red as we speak, and it is going to hike the prices of its cars starting April. And Sudarshan is here to tell us more on that. Sudarshan, yet another price hike from Maruti.
That's true, yet another price hike. So first hike that company had announced in the recent past was in December 2024, which was effective January 1, 2025. And again in January, company had announced another price increase, which was effective Feb 1. Now today's announcement would be effective April 1. And all the three price hike that company has announced in the recent past was up to 4% each. Now today, company has announced price hike, but despite that, you are seeing that share price has fallen more than 2% from day's high. And the reason that company has mentioned about the price hike is because it's saying that certain costs have increased. But apart from the cost increase, if you look at the sales data also, wholesale data for the month of February, it was below estimates, especially the entry-level segment. Both Alto and Espresso sales had fallen more than 30% each, and the support came from the utility vehicle segment, for which sales had increased just by 6%. For March, from March 1 to March 16, retail data also, if you see for PV industry, not just from Maruti, PV industry, this is the data, and for which registration is down 22%. So it's not only the wholesale data, even retail data has been disappointing for second consecutive month. So there are certain reasons for which these companies, not only Maruti, even other companies also in the recent past have announced price increase. Now, the second stock that has been in focus from the auto sector is Tata Motors. In the last 1 or 2 weeks, we have seen several positive notes. Last week, both CLSA and ICICI Securities had upgraded Tata Motors. Now today, HSBC has come out with a positive note. It has upgraded the stock to buy from hold, but has cut target price to 840 from 930. But still, the 840 target price implies an upside of almost 30% from current levels. So what does HSBC say? It says that just a second. It says that JLR has maintained Q4 EBIT margin guidance of more than 10%. If and JLR manages to hold on to that guidance, it might be positive trigger for the stock. Also, the valuation front, after the recent underperformance, valuation has become reasonable, not only for Tata Motors, even for JLR. So considering all these factors, these brokerages in the recent past have upgraded or turned positive on Tata Motors. And today also, amongst all the stocks, it's the one stock which is higher in trade.
Take that point, Sudarshan. Indeed, Tata Motors is the one which is up around 0.5%. But remember, it's also fallen about 44% from the top as well. Brokerage is now finding the valuations a little more compelling. Though the market has now come off considerably from the highs. We have the Nifty, which is holding on in the green just by about 45 points. So from today's high, it's down about 125 points. What is it that's leading the market lower? Just pull up the intraday chart of Reliance. That's the one that should come up for you. It was a heavyweight that the street was hoping for, seeing some respite in this morning. Mitesh also made a call on that stock after the big decline that we've seen in the stock earlier, and some bit of an up move. A lot of them believe that this is in oversold territory and maybe could be a case for an up move, but that hasn't been the case for Reliance. It's actually dragged the Nifty lower. In the IT pack, we have Wipro, which also has been a bit of an underperformer, and that stock too has moved to the low point of trade. And finally, before we slip into that short break, pull up the intraday chart of IndusInd Bank. IndusInd Bank at in early trade was up nearly 4.5%, closer to 5%, as it got that relief in terms of RBI coming in and assuaging people's concerns about their deposits, etc. This does not take away from the fact that the company's net worth still stands impacted by the derivatives loss, and the stock was down about 27-28 odd percent. What the RBI had said is that you as depositors, your money is safe in IndusInd Bank, and this was to avoid a run on the bank kind of situation. But financially, they still stand to lose the money that they do when in the derivatives transactions that the company did inform the exchanges. So from the highs, IndusInd Bank too is lower. The assuaging of concerns from the RBI was mainly for customers, not necessarily for investors. With that, we take a short break, and as we do that, let's get you a small programming note. HSBC India and CNBC-TV18, we're back with Season 2 of SME Champion Awards. This prestigious platform celebrates SMEs that are pushing boundaries, making an impact and shaping the future. Nominations are now open. You can scan the QR code and submit your entry for the SME Champion Awards Season 2.
The Nifty is now down to 22,450, so 125 points off the highs of the day now is where the index stands. But there are plenty of reactions that we are seeing in specific stocks. That is courtesy their shareholder lock-ins ending in today's session. Particularly one of them is IKS Health, the Inventress Knowledge Solutions. That is the stock, and it's the Jhunjhunwala family promoted name. Of course, that stock is down almost 10%, almost 13% now at the lowest point of the day, and that is after its 3-month lock-in period came to an end in today's trading session. 42 lakh shares, 2% of the outstanding becoming eligible to be traded, and that is the reaction that you're seeing. Of course, we need to tell you that the ending of the shareholder lock-in period does not mean that all of these shares will be sold in the open market, but they just become eligible to be traded. So with this now, apart from IKS, there is a total of 7 companies whose shareholder lock-ins end, which is around 19.5 crore shares becoming eligible to trade, and the lion's share of that is garnered by Vishal Megamart. That's almost 15.5 crore shares that become eligible to be traded, which is almost just 3% of its outstanding, but it was one of those few names that are still holding above their IPO price among the recent listings. And MobiKwik is the other one that is seeing a very sharp reaction in today's trading session. 46 lakh shares becoming eligible to trade, 6% of outstanding. The stock is now well below its IPO price. At one point was down almost 13%, seen some recovery from the lows, but still holding on to some substantial losses, and is down almost 65% from its post-listing high, which was almost 700 rupees. And the other one is Ajax Engineering, 30 lakh shares, 3% outstanding. That stock too trading below its IPO price. And the other one is SBI Life Insurance, 4% of outstanding, 83 lakh shares becoming eligible to trade. That stock too is trading with losses in today's trading session. EMS is the one, and the last two names, EMS and of course Ratnavir Precision, these are the two names whose 18 months and beyond lock-in period is ending in today's session. EMS, 1.1 crore shares, 20% outstanding, and that stock, despite a 40% correction, is up still 3x from its IPO price. And Ratnavir Precision, another 98 lakh shares and 20% of the outstanding becoming eligible to be traded. That stock too has halved from its post-listing high. So significant reactions seen, but prominent among them, IKS and MobiKwik, the two prominent names there.
Take that point. IKS and MobiKwik are the ones which are falling the most today. We'll keep an eye out on that, and also keep an eye out on a bunch of them that open in the next couple of days. But one of them which is not doing too well from the IT pack is LTI Mindtree under pressure. We understand that Citigroup plans to reduce dependence on external IT contractors to 20% from 50%. How does that impact the business or prospects for LTI Mindtree? Reema joins in to explain. Reema.
Thanks so much for that. So we picked up from a TOI report that Citigroup, the large global banking giant, is planning to reduce its dependence on external IT contractors, as you correctly said, from 50% to 20%. Instead, what they want to do is beef up their internal tech team by hiring more. Currently, they have 48,000 employees on their IT payroll. They want to increase that number to 50,000. The key reason for this shift in strategy is for regulatory reasons. They want to control their data, so data governance, risk management, fraud, etc. And in the past, just in the last 12 months, the company Citigroup has had to pay certain penalties for not adhering to the data governance standard. So that's the key, story that we picked up from reports, that they want to reduce the dependence on IT contractor. Now, why LTI Mindtree? Because Citigroup is one of the top 2 clients of LTI Mindtree, so it could potentially get impacted. But also other IT companies, considering how large Citigroup is. Even analysts told me that other IT companies like Infy, TCS, Wipro all do work for Citigroup. Here, the only thing we need to know is whether they plan to reduce the dependence on external vendors or external subcontractors. If it is just subcontractors, then the impact may not be so much. If it is reducing dependence on external IT vendors, then there could be some consolidation. Some IT services companies could lose work. But what could mitigate the impact is that point that the internal tech team is going to go, the headcount is only going to go up by 2,000 employees. In that sense, it may not be very significant, but there is potential negative news for now. The street is a bit worried. Back to you.
Indeed, and the impact is being felt across the mid-cap IT space, as we just spoke about a few minutes earlier, be it the likes of FirstSource, Happiest Minds, Zensar, all of them bearing the brunt of this news. LTI Mindtree itself is down almost 3.25%. The Nifty IT index has had a very volatile trading session, and FirstSource now down to the lowest point of the day, 9% lower now on that stock. But some of the other names that are doing well for themselves today, we've spoken enough about the losers. Hitachi Energy has sprung to the high of the day, now 6% higher on the stock. 12,760 is where it stands among the top gainers on the Nifty 500. So good going there for Hitachi Energy. We take a short break. On the other side, Manisha Gupta joins in with Kishore Ranwal of Anmol Jewelers. Stay tuned. We'll be right back.
Welcome back, and joining us on the show now is Kishore Ranwal, MD at Anmol Jewelers. Kishore, hi, thank you so much for joining in. And it clearly, if you look at the data, it shows that silver has outperformed gold in this year until now. So while gold prices have gained up by 14%, silver is up by 17.5% till time. It's trading above 1 lakh rupees a kg. I want to understand from you, at these current levels, are there any buyers at all for the silver market?
Thank you, Manisha ji. Seeing the current levels of the rates in silver in physical markets, we are finding low investments. Let it be safe haven investments are also very slow. Markets are running very slow. We don't see much buying in investments. We don't see much buying in silver jewelry and articles. And the markets are running very slow. So these levels are really harming the trade as of now in the Indian markets.
Mr. Ranwal, also, how would you look at the prices going forward? I mean, this is a level that the industry has been talking about for a long time now. 1,10,000, 1,20,000, 1,30,000. What is it that the street is talking about?
As per the trade, if you see the Trump's trade economy policies are pushing the rallies of gold and silver. Let it be the ease in interest rates. Let it be the what you call the stock market volatility. These are some of the reasons where the rally of the gold and silver has taken a rise. And we see if the rally, if the barrier, the markets are holding at 1,03,000 in physical market. If this holds and if this continues maybe for 4-5 days, then you will see one more rally, one more jump, where the next barrier I think should be somewhere near 1,08,000 to 1,10,000 in physical markets.
Mr. Ranwal, also, when you look at the Indian markets, I believe it is just 7 to 10%, which is industrial demand. Rest all is still about physical buying, safe haven buying, silver jewelry, silver artifacts, etc. In the last few days, if there is something that people have been buying, what really has been the major way of perhaps buying silver or investing in silver?
The major, as I said you, at these level, we don't find investors. Let it be in any form. But markets are going due to the silver jewelry markets are doing good due to exhibitions. We are having a bit of demand as there are a lot of exhibitions coming for particular in silver. That is helping a demand. People are putting new stores of silver, and silver jewelry and articles are maintaining. Investments are looking low. So I feel that as of now, silver demand is not that high due to the rates.
Mr. Ranwal, also, how are you looking at the markets moving from here on, really? Because there is an expectation, or there is a market that is moving from perhaps gold jewelry to silver jewelry. As you said, those numbers look quite better there. What are the kind of imports that we are looking at this point in time? Last year wasn't so great, but that is because 23 we saw record imports. Now, in this year, for the first couple of months that we've seen in 2025, what is your sense on those numbers?
January saw import of somewhere near 800 to 850 tons, and February also we are expecting somewhere near 750 to 800 tons. And March looks very slow. Seeing to these numbers, we have already touched 8,300 tons as per the details received from Metal Focus. But seeing this imports, India has done very good in silver because compared to last year, we are nearly doubled the imports. So silver is doing good. And that's why we are seeing, compared to gold, we see a good percentage of increase in the valuation by 17% compared to the gold to 10%.
Mr. Ranwal, also, how is the recycling market looking like? Because we've seen that kind of increase in sense of gold. Now, with silver at ₹1,00,000, do you see people coming out trying to sell their old silver?
Actually, if you see, people are coming out to those who are looking at the rates. People are coming out to give their old silver because the rates are very high. So they prefer that we will give their old silver and buy the new silver where necessity is there. For example, a marriage is there at their house, so they have the old stuff which is not being used, or it is not somewhere usable. So they give their old silver, get it recycled, and give it to the shopkeepers. Instead, buy new articles in cases of marriages and necessity. But I don't see that people are coming to just sell silver, the old silver, and get into it.
All right, take that point. So they are basically replenishing it and not selling their family silver, as they say. Manisha, thank you so much for that. Silver prices are on the boil. With that, we'll take a short break, wrap up on this edition of Halftime Report. Business Lunch takes all the market action ahead.